Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So apologies due to technical difficulties. Last week we were not able to hold this session. So today, no matter what happened, I had to try my best and make sure that it happens as usual. So there's quite a number of things that we are looking forward to. And of course, a number of developments that have happened over the day. So we'll be going through all that, do some technical analysis, and understand where the markets may be headed next. So hello, Jason, Evans, Mercy, and Takeout. Thank you guys for joining the session. So let's get things going. So first things first, let's look at the economic calendar, try and understand what is currently happening. So from the data or the news that you're expecting, this was basically the S&P Global Flash Manufacturing as well as Services PMI. We had quite a number of developments. So first was the French Flash and Services PMI, which came in slightly worse than expected for manufacturing. But then for the Services PMI, there was a slight improvement, but still missed expectations. Then for the biggest economy in Europe, which is Germany, we had an improvement in the manufacturing sector. And of course, we also had an improvement in the services sector. However, when you do for all the European countries within the Eurozone, we saw a slight improvement in manufacturing to 43.8, but also still significantly below 50.0, which means that the industry is still contracting. And then for the services PMI, it was at 48.2, which was a slight improvement, but still within the contraction territory. So looking at the UK side, manufacturing improved from 44.8 to 46.7. This was a welcome increase, but still within contraction. But then services managed to jump into expansion territory from 49.5 up to 50.5, which is above 50.0, indicating that services have really picked up in the UK. Then we had the ECB monetary policy meeting accounts. And from the details of the last ECB meeting, basically showed that there is a strong likelihood that the ECB is not yet done with the rate hikes. So there's that potential that the ECB could yet implement another rate hike in order to address the current high inflation environment. So today remains Thanksgiving Day. We saw the holidays happening in Japan, and of course the US, as discussed earlier in the market snapshot series in the morning. So in this case, going forward, we are expecting a really slow market. So normally in the cycle of a year, whenever we have the Thanksgiving Day, the following day is usually traded halfway in the market, since the participants, especially in the US, are celebrating what we refer to as Black Friday. So the Friday right after Thanksgiving Day is Black Friday. Then this is when you have out of retail discounts. And it's also considered an extension of the Thanksgiving holiday. So we start getting into this moment where people are celebrating these holidays. And of course, by next week, when we get into December, this is when people will start arming their offices as well as their homes with Christmas items, Christmas decorations, and so on. And this is how basically the holiday mood gets started. So whenever we see these in the markets, it's usually an indicator that things are beginning to slow down. So we start seeing much less volatility all the way down until after Christmas, when we normally look forward to what we call the Santa Claus rally. So right after Christmas, this is usually on the 27th of December, we normally see Santa Claus rally happening in US equities, and hopefully we are looking to get one this year. So as we continue, if you have any questions, feel free to type that in the live comment section, and I'll be ready to respond as we proceed. I can see quite a number of questions. Hi, J Squad. Hi, Lawrence, Steven, and Mr. Easy. Gold, do you view it as bullish? I'll be checking on that. Do you trade news before release or after? Trading news before release is usually a risky endeavor, because you have no idea of what might be the outcome of the news. And of course, it could be a big news coming up, and then you could be extremely wrong, or you could also be extremely right. Sometimes news may even whipsaw, which means it shoots up and then back downwards, and this can lead to significant losses in your account. So to trade from a prudent point of view, it's much more interesting to wait for news to be released, read the outcome of the news, understand what it means for the market, and then and only then decide on whether to go for a trade. So in the economic front, there's been quite a number of developments for the day. So we have already seen that the Euro area private sector activity remains weak, and this is after we saw the composite PMI at 47.1 in November from a 3-year low of 46.5 in October. It was slightly above expectations of 46.9, a preliminary estimate showed. So readings still indicated that a 6th consecutive month of reduced business activity, albeit at a softer pace as both services and manufacturing output contracted less. So among these and other highlights, we have seen ECB rate hikes are still on table despite easing inflation, and this is coming from the ECB meeting minutes. So ECB members agreed that maintaining interest rates in a restrictive range for an extended period would likely be necessary. So European stocks gained traction in afternoon trading. This is after we had a completely muted day. We didn't have much volatility as a lot of Europeans were also celebrating the Thanksgiving Day. Then we had the news coming from South African Central Bank, where the Reserve Bank of South Africa decided to unanimously leave its key repo rate steady at 8.25%, and this was quite unexpected. Turkey hikes policy rate beyond expectations. So in this case, the Central Bank of Turkey increased its benchmark 1-week repo rate by 500 basis points to 40% in November 2023. So this is such a tough hike. This is basically hiking interest rates by 5%. It's like the Central Bank of Kenya moving from 11.5% to 16.5%. So whenever you see such a huge move, it's usually done to try and suddenly strengthen the currency. And in this case, we expect to see the Turkish lira gaining some ground. So Riksbank unexpectedly leaves a rate study, and this is the Central Bank of Sweden, which held its policy rate at 4% during its November meeting. So in this case, we look at the Swedish krona and how it may be developing for the day. So German private sector contraction eases in November. So in this case, we are seeing the private sector in Germany slightly improving, but still within contraction territory. So on the calendar, things to look forward to, we'll be looking at the Japan core inflation rate year over year. We'll also be looking at Japan inflation rate year over year, then UK GFK consumer confidence survey, then Japan Jibun Bank manufacturing PMI, as well as a services PMI. So these are the key highlights to be checking out tomorrow. So if you want to read more, you can check out the economic calendar and you'll see some of the developments happening tomorrow. So at 12:45 a.m., just past midnight, we'll get the New Zealand retail sales data. As mentioned, the national core CPI for Japan, flash manufacturing and services PMI at 3:30 a.m. Then the German IFO business climate data. There will be a speech from ECB President Lagarde, and this will be happening at 1 p.m. tomorrow. She is due to speak at the Euro 20 Plus in Frankfurt. Then we'll get the retail sales and core retail sales for Canada at 4:30 p.m. And of course, the most important data point will be the US manufacturing and services PMI, which will be happening at 5:45 p.m. So this basically shows that the most important data point and focus for traders will be at 5:45 p.m. And the rest of the day will be majorly what we describe as a price action traders territory. So knowing what we know, and now looking forward to tomorrow, there's quite a number of developments that we need to understand. And I'll try now focus my presentation on the charts here. So first things first is that the dollar index has really struggled to move higher after having this recent drop. So yesterday in the evening, we saw the dollar index losing some ground, and then today in the morning hours, it was still losing some ground. And then later on in the afternoon, we saw the dollar attempt to gain, but then this gain is not sustainable as it doesn't have as much energy. And in this case, we expect the prevailing trend to be the bearish momentum we have been seeing over the last couple of weeks. So with the weak dollar index, we have seen other currencies take advantage of this. For instance, after the news, that is the manufacturing PMI, we basically saw the pound make a good rally, but it was not able to sustain that upwards trajectory. And later on in the day, so the prices moving back downwards. So in this case, there is that expectation that the pound will continue climbing against the dollar. So perhaps we'll be seeing some further upside as we open the next session, which will be the Sydney session later in the day. So USD JPY has been the most bullish this afternoon after the big sell-off that we saw in the early morning trading. So after the market managed to bounce from this support level of 148.951, we have seen the market raise all the losses, and this is usually indicative of a market that has some very strong momentum. So after the big break at the beginning of the week and now the recovery, we can see that the USD JPY has basically erased all the losses. Pulling back today and then continuing up basically means that we have what we call a cup and a handle pattern. And this is something we have been talking about a lot lately because these patterns have been repeating. So in this case, we have a completed pattern here. I'll try and highlight it. So the market moves from here, goes down and then up, gets to the neckline, goes back down and then up, and then completes the pattern here. So it's usually a continuation pattern, and it indicates the potential for the market continuing within that direction. So we could be expecting a break above the neckline and the market rallying back up to around 150.769. So we could also see some short-term momentum to 150.142. So as for USD JPY, Euro USD, we are seeing a market that is clearly muted. We don't have as much volatility today. But then it's also important to understand that in early morning trading, the euro was continuously gaining against the dollar. So after the news was announced, this was the manufacturing PMIs, we had a lot of indecision. You can see the green candlestick with long tails. But then the market pulled back downwards and then up in what looks like a muted market. So in a muted market, I would say there's nothing much happening in these charts. So it's more of investors are sitting on the sidelines, waiting to see what might happen once the Americans are back, and perhaps we'll be seeing some key drivers in the market. So for USD CAD, we have seen a very strong rebounds for the dollar against the Canadian dollar. So this strong bounce is indicative of a market that is quite strong. So in this case, I will be expecting to see some further. Just a moment. Okay, I was trying to clean my chart here. So we have this bottom here. That has been our major support. And of course, on the hourly, we have this trend line that was acting as support. Then for the resistance, I would say this area here has been acting as the resistance. If we eliminate just one data point, which seems to be an outlier or a false breakout that happened yesterday. So there was this false breakout and the market pulled back downwards, and now it's right here. And now we are on the verge of yet another breakout. So if USD CAD manages to break above this area here, then a nice target might be yesterday's high. So in this case, the potential would be the market now gunning for this area here. So there's that potential. You could be seeing the market breaking up straight and getting straight to 1.37643. So I think there was a question on gold on whether it should be bullish or bearish. From what I'm seeing here, there was this speculation that the market would remain within this formation where it has been moving up and then down, with a major resistance at around 2009 price level. So from what we are seeing this week, it doesn't seem to be much, but then the expectation was that the market would get along this area. But as you can see today, we didn't have much of a movement. And this is majorly because a lot of Americans have not been participating in the markets. But then a key theme is emerging right here. So I'll try to highlight it. So after forming this double top formation, then you can see that this is now becoming an idea for gold traders, that there is some form of resistance around this area. So every time the market has gotten to this trend line, all we are seeing is the market pressing further back downwards. So there is this constricted movement where the volatility is literally dying out. And this is usually a sign of consolidation, market moving up and then down and then up and then down and then up. So at some point, we expect some form of breakout. So the idea is to first identify the potential area of breakout. So this is around 1988. So the market could either break out to the upper side or to the lower side. So in this case, the idea is to monitor the potential breakout. And once the breakout happens, then you know the direction to go for. So the market could either break above 1993, and now we go for bullish positions, or if it breaks below the lower trend line, which is 1988, then you go for short selling positions. So I hope that makes sense for everyone, and you'll be able to monitor that consolidation and then wait for the opportune moment to go for your trades. So this is the consolidation area. It's on the 50-minute chart. So now we are waiting for a potential break either to the upper side above 1993 or to the lower side below 1988. So as far the holiday season, we are seeing very low volatility. You can see from morning after this movement, the rest has been up, down, up, down, up, down, but nothing much to look forward to. But then the breakout is coming, and that will probably bring in the expected volatility. And of course, we tend to drive whenever there is a volatility in the markets. So for AUD/USD, clearly a sideways momentum. So after getting to that high, we don't have much of a price action here. So it's a market that is basically trading sideways, and now we await the next break. So I would say for the last 4 days, it's just sideways momentum. It's not a clear momentum upwards or downwards. It's more of a sideways market, and from such a market, we don't expect much. So we basically expect to trade whenever the market moves out of this consolidation. So to get clearer, you can identify the highs and connect them with a trend line, and the lows connect them with a trend line, and then wait for the eventual break. So US equity indices, as I had projected early in the morning. So there was this morning bullish momentum in the Nasdaq, but then I expected we wouldn't get nothing from this. So there was a slow return to nothing of a movement here, and I expect the market to remain here. Perhaps we could be seeing some volatility coming in maybe towards the end of the day tomorrow. Remember, the markets will be open for half a day, so nothing much to look forward to. So in this case, we just monitor these areas and wait for the eventual break. So it's a similar case for the US 30. So notice that the Dow managed to squeeze in some bullish momentum here in the New York session before pulling back downwards. But then we don't have such a major extreme move that would warrant a very strong trade. So in this case, it's still within consolidation. And of course, for the S&P 500, I expected something similar within these lines. And as you can see, nothing much has changed. So from what we are seeing here is a market that is just consolidating. And the idea is to be patient and then wait for the market to eventually present a break where you would now go for your eventual positions. So Brent oil managed to have a big 5% sale yesterday before recovering about 4% towards the end of the market. Then today, you can see the way we opened with a momentum downwards and then up, down, up, down. And as you can see, there isn't much happening here. So clearly, it's a market that is trading within a bearish channel. So if you want to use these as our upper trend line and the lower trend line, we use the bottom of the day, and these are the bottom And clearly the market has been moving down, and then up, down, up, down, up. And this is a sign of consolidation, which you still have to be patient and wait for an eventual breakout. So it seems like the markets have really slowed down. For instance, for the French 40 index, notice the momentum up, down, and then today's ugly price action. I would call this very ugly because you don't want to be entering such a market. So you go for a buy trade, market goes up, you go for a short trade, market goes down, and then there's all this noise. So yes, there's a slight incline where generally you can see that price is moving upwards, but then it's not a strong momentum that gives you some nice profits. So in this case, I tend to view this as indecision in the markets. So it's better to hold your cards and wait until there's a clear direction in the market. So for instance, on the 1 hour chart, you can see the small candlesticks inclining towards the upper side. They are not something you're interested in compared to, let's say, trading something like this. So something like this is quite more rewarding compared to trading something like this. So yes, we know that the market is losing momentum over time. So sometimes it's easy to remove all your area analysis and then try to speculate on where price is headed. So in this case, I think it's pretty easy to understand that this has been the support area. And of course, for resistance, we can see there has been this sort of trend line that has been acting as resistance. So tracking breakouts out of this one would make much more sense, and potentially if it were to happen to the lower side. So for the Euro 50 cash index, as you can see, it has been continuing with a upwards trajectory, but then we don't have much volatility for the day. So it's more of a slow incline, maintaining the incline, but very slight or slow movements. So from here, if we were to look at the price action for the day, clearly, this is up, down, up, down, up, down movement. So from the 1 hour chart, each hour is very small in terms of the magnitude of movement. So the difference between the open and close for an hour is pretty small. So if you look at the doji candlesticks, we already have 6 within 1 day. So these are 6 1-hour candlesticks showing that price did not move up or down, just maintained within that level. And we have had a couple of instances where the prices attempted to go up, but now already they are moving back downwards. So nothing much of a change. So it's more of an area where you should start considering a potential breakout. So Bitcoin, on the other hand, has had some good volatility. We were expecting the price to at least get to this resistance. Somehow it did not manage. So after attempting to go up during the London session, there was bearish momentum, went back downwards and then up, which is also indicative of a market that is having indecision. So clearly from this high to this high, then this is quite a consolidation for the day. So that's the area we've been trading for the better part of the day. So as you can see, overall, it's easy to assume that these markets have not been moving much for the day, and they are setting up some good setups that might represent some good entries when the eventual breakouts happen. So for USD CHF, we identified this sideways momentum. It has maintained there for the better part of the day. So in this case, we expect this to remain so. So only volatility seems to be in JPY pairs. So with pound yen making the biggest rally for the day among currencies. And of course, we have this as the target area, which is 188.222. So in this case, I think the probable course of action is looking at potential entries in USD JPY. Well, you trade the completion of this pullback. Of course, there's the expectation that the pound will continue regaining ground against the yen, and we could see the market touching this area before the end of the week. So in this case, good potential momentum trade, taking advantage of this upwards trajectory in the USD yen. Sorry, in the pound yen. So in this case, we know that this is our resistance. Remember, this is more of a pennant kind of a pattern. So a pennant is basically a triangular flag in this case. So in this case, if the market happens to break outside this flag, then the idea is to go for bullish positions targeting 188.222. And that is if the breakout is on the upper side. So I think this is a good setup to be considering for the day. And after looking at that, I think the last asset we'll be looking at is the South African rand. So we saw the Central Bank of South Africa maintaining interest rates. So what followed after that decision was a big spike in the dollar against the South African rand. So in this case, you can see since the beginning of the day, the US dollar was losing against the South African rand. But then going into the afternoon, we had a big reversal where the dollar continues gaining against the rand. And in this case, I expect to see this weekly momentum continue. So for the better part of the week, the US dollar has been gaining against the South African rand, and we had a major trend line broken here. So trend line was broken right here. And clearly after that point, it seems like the dollar is now recovering against the South African rand. And from the bottom here, you can see that the ZAR was unable to form lower highs, basically leading to this potential momentum upwards. So after meeting the first resistance here and breaking above that, then there's that potential that the price will continue moving higher. So notice this was a retest of this level, which was a support area here. And now the continuation is on the books. So potentially we could be seeing the market going for this next week. So this is quite achievable for USD ZAR. We could be seeing the dollar gaining and getting to 19.27127 towards the end of the week. So that's it for the day. I appreciate you guys for joining the session and also for your questions. So I'm just checking to see if there's any other question so that I can respond to that. How do I know how many pips do gold move per day? Gold is the most unpredictable asset you'll ever find in the markets. So you can't tell whether it will move 10 pips, 100 pips, but sometimes you can easily guess the volatility based on the activity in the economic calendar. For instance, if it's the CPI news or NFP, you tend to see much higher volatility compared to other days where the economic calendar is largely quiet. How do you spot force breakout and avoid it? Sometimes spotting a force breakout demands that you look at the size of the candlesticks after a breakout. So that can be a good indicator. So you won't trade a breakout that happens with high momentum. So if a breakout happens with very small candlesticks, then that's probably a force breakout, and you might want to stay out of that. But then if there's major candlesticks making big moves, then in that case, you might have some confidence in the direction of the breakout. Don't know if you have any examples here, but if I get any, I'll be happy to highlight. So the idea is to look at the size of the candlesticks at the breakout to see if they represent a good rally. For instance, we have this, I think this is a good example here. So this is the Nikkei 225 index, and clearly it has broken above the upper trend line. So notice how it struggled here after breaking out and then spiked towards midnight and did not get quite ahead with that breakout. So in this case, notice how the candlesticks were green, 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 green. And then after the breakout, they became really small and we didn't have much. But then from this sequence of candlesticks here, you can tell that now there's entry of buyers in this market, and now they are attempting to push prices higher. So in this case, now we have evidence that the market may be headed higher. So going into next week, we'll be looking for longer positions. But then it's also important to notice that the upper end of the pattern here is not very far off. So we might not be targeting to trade much higher than this. So this is a major resistance for the Nikkei 225. So if any bullish positions come by, then it's targeting 34,000. So I think I've already covered the New Zealand USD and the Nasdaq. So thank you guys. Hello, there's a crypto series you had started some time back. Are you considering to continue with it, like the novice to pro series? I'm considering that, but it's something for next year. So I'm looking at a completely new series besides the novice to pro, something that would provide value to you guys. Hopefully, I will be able to communicate in time as we approach the end of the year, because there's nothing much to do. We are only left with a very few number of working days this year. So the majority of the work will be coming in on January. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session.